Hi friends, welcome back to FinveStocks. Today in this video, we will see how Indian market performed in year 2022. What should be the investment strategy for playing safe in 2023? So here we will say in detail about the investing in Indian market versus US market. So in this video, we will see more into details of how the stock market performed for India as well as US in year 2022. And going forward, what should be our investment strategy for 2023? Whether you should invest in Indian stock market or you should pick US stock market. If you look into last year's performance, US market went through a year of losses for S&P 500 as well as Nasdaq 100. The stock index of US hit an all-time high in year 2022 January, and after that it went on a downhill. So S&P 500 lost almost 20% over last 1 year, and tech heavy index Nasdaq 100 ended with more than 30% down. In US market, the top 6 mega companies, that is Amazon, Apple, Alphabet, Microsoft, Tesla and Meta platform, collectively lost around 908 billions in market value, so which accounts about half decline in overall S&P index 500. So Apple, the largest market cap company in the world, saw a deep discount of 25% in the stock price, whereas both Tesla and Meta were lowered by almost 65% from the high levels seen in January 2022. When you see the overall return from Indian market versus US market, Indian stock market posted approximately 4% to 6% return, whereas US market were down by 20 to 30%. So what is the scope for Indian market going forward, mainly for year 2023, as Indian market was not corrected of the magnitude of US market? If you see the economic trend over the years, India has accounted 13.5% economic growth in the year 2022. Whereas if you see the next best nation is in Europe area, that is around 4.1. US accounted for around 2.1%. So if you see overall the top economic drivers in the world, India stands on the top. The same thing holds good for 10 years average economic growth as well as expected earning for 2023 as well as 24. In 2023 estimates, India is showing around 6.2, whereas in 2024 it is showing around 7. So which is almost high compared to other nations. Now let's see where India stands in MSCI index. If you compare with other emerging market as well as China and other developing countries, India stand on the top. If you see return on last 3 months, it is around 12%. Whereas in last 6 months, it has given 8% return, which is highest of all. Last 1 year, India has given a return of around 3%, whereas China has shown 32% degrowth, whereas other markets were 25% down. If you see the MSCI index of world for developed countries, it's around minus 13% on a yearly basis. Similarly, if you see a CAGR of 2 years, 3 years, 5 years and over 10 years period, India stands in a good position compared to other indices. Now let's see the sectorial winners and losers for year 2022 in Indian market. So the clear winner on sector basis is power as well as utilities, which accounts around 30% growth in last 1 year. Sectors like bank, FMCG, capital good, energy, auto and oil and gas shown good performance, nearly 20% growth in last 1 year, whereas metal grew by 10%. If you see consumer discretionary, they went flat in last 1 year, whereas realty and healthcare was down by approximately 10%. The sector which lost its maximum shine was IT. IT account for nearly 20% degrowth in last 1 year. This is because of the tech breakdown in US, which followed in India also. Because majority of the IT services or IT providers in India depends on world market or US market. Now let's see the FPI outflow in India for last 1 year. In last 1 year, India witnessed a FPI outflow of around 18,000 crores, which is one of the worst in the history. A similar trend was observed in 2018, wherein it saw a outflow of around 4,500 crores. So instead of having massive outflow of FPI around $18,000 million, this shows the resilience of Indian market towards world economy. In last 1 year, BSE has headed towards the same area. It's closed nearly flat with an annual return of approximately 5%. If you see the 1 year chart, on technical front, BSE is showing inverted head and shoulder pattern. So once it break out, then it can show significant upward momentum. Similarly, the same trend is happening on NSE also. wherein it is showing an inverted head and shoulders. NSE has given approximately 4% return in last 1 year. 1 year back, Nifty was trading around 17,642 and it closed around 18,234 towards the end of the year. The return is approximately 4%. Currently, it is showing inverted head and shoulder pattern. In terms of market cap, India was at 7th position during start of 2022. India is currently at 5th position in terms of market cap with around $3.21 trillion. So if you see the equity returns for past 1 year, BSE has given a return of around 4.94%, whereas BSE 500 closed with 3.57%. Mid cap was flat with 1% return, whereas small cap closed with a minor loss of around 2.55%. So one of the best performing sector was BSE Power with 26% and the worst performing sector was IT with around 24% down. In terms of debt, shorter duration debt accounts around 4% return, whereas medium term debt got a return of around 3.8%. Long term duration debt accounts around given about a return of around 1.8%. So in this category, the best performing debt fund was credit risk fund, whereas gilt with 10-year constant duration shown a return of around 0.8%. So the year 2022 was a good year for gold. Gold fund has given a return of around 12.87%, whereas physical gold has delivered a return of around 14.27%. In terms of real estate also grown well in the last 1 year. So after so many years of recession, real estate shown sign of recovery. In Bangalore region, it's shown a growth of around 18 to 24%, whereas Chennai has shown a growth of around 20 to 25%. Delhi has shown maximum growth of around 29 to 38%, whereas Hyderabad accounts for 21 to 26%. Other cities like Kolkata, Pune and Mumbai shown a growth of around 18 to 24%. For past 1 year, gold has given a good return, whereas real estate sector has shown good recovery with posting around 20% return. This was not a good year for equity, but for Indian market is shown good resilience compared to world market, where US was down around 20 to 30%. India was closed with flat or mildly positive return of around 4 to 5%. So this shows the strength of Indian market compared to the world market. And currently Indian market starts decoupling with the US market. Earlier, Indian market used to show good relation or good correlation compared to the US market, wherein if the US market fall, India will start falling more than US. But currently the decoupling is start happening and Indian market seems to decouple with the US market. This is clearly indicated from the returns shown in last 1 year, where US market were down by 20 to 30%, whereas Indian market shown good comparative return of around 4 to 6%. So going forward in 2023, there are a lot of good investment options need to be identified. So in upcoming videos, we will explore opportunities for investment in like Indian equity, US equity, where it is down by approximately 30% from the year high. Then in cryptos, wherein Bitcoin is in a good support level. Then gold, real estate, debt fund. So all these things we will explore in the upcoming videos. Also, we will try to bring a basket of stocks which will perform good in upcoming years for short term to medium term. All these things we will see in our upcoming video. We will also try to bring a basket of stocks which will definitely outperform the index and will give good return in upcoming years. Thanks for watching and have a good day.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday Basics to make your stock market journey easy. Thanks for watching and have a good day.